pilots under HMRC specific rules have certain things that count as a workday in the UK and don't count as a workday in the UK. Welcome to the Tax Compass podcast, navigating UK tax for expats with LSR partners. Welcome back to the LSR Partners Tax Compass podcast with me, Simon Roue, and my business partner, Laura Sant.
Hi.
Today, we're talking about a pretty interesting area if you're tax nerds like we are, which is in relation to pilots. We'll come on to that in a minute, but please remember that if you like this podcast and you want to see more very dull or even interesting tax topics discussed, please like and subscribe so we can get more and more people tuning in. So Laura, this is one where we've had to do a bit of scratching around and research. I say we, you've had to go and refresh yourself. We've got a number of pilots who are clients, pilots, and we've had a couple of seafarers, and we've also had cabin crew, obviously. Yes. And it's an area, I guess, where often people are a bit confused as to the way in which it sort of works in terms of you spend a lot of time out of the UK, obviously, if you're an international pilot, and you have to think hard about how you get taxed in that situation. So we'll split it into two pieces. The first piece we'll talk about how it works within the context of the Statutory Residence Test, and then we'll look at it from a tax treaty perspective, because they are obviously interlinked, but they're different too. Yeah. So perhaps you can start by just outlining how we have to look at these types of people from a Statutory Residence Test perspective.
No worries. So I think the big thing when it comes to pilots and air cabin crew, when we are looking at the Statutory Residence Test, if you're, I suppose, an international transportation worker, which means that majority...
Which is how they usually refer to it, isn't it? Yeah. Not specifically pilots. It's like anyone who goes cross-border.
Yes. And I mean, they talk about having a relevant job, basically. So as they say, if substantially all of your journeys are cross-border, and you have 6 or more journeys starting or ending in the UK, then at that stage, a couple of the tests of the Statutory Residence Test automatically get discounted and can't be used.
And which ones are they?
So that's the third automatic overseas test, which is full-time work outside of the UK, and the third automatic UK test, which is full-time work inside of the UK.
Which I guess stands to reason, given you're going in and out.
Exactly. So it does make things a bit more complicated. And I think, I suppose from our perspective and in terms of the type of work that we've seen more recently are people who are upping and leaving the UK.
I can't imagine why.
But some of them are going back a few years now, but have been going to countries in Europe for personal reasons, but maybe remaining employed with a UK-based...
So we've got one client, haven't we, that works for a large airline based in the UK, somewhere near Heathrow, who will remain nameless.
Yeah.
And has been doing that for several years, lived in the UK, but has now relocated to Spain.
Yes. Yeah. We've had it with Ireland as well, and I think France is another one we've come across. But basically, I suppose where they can hop on a plane quite easily to get into the UK to fly from, and because I suppose their home base has switched from being the UK to being outside of the UK, the question then arises in terms of, well, what's my tax position from a UK perspective? I suppose the starting point is to consider what the UK tax residence position will be. And when you kind of knock the two full-time work tests out of the Statutory Residence Test in these particular scenarios, it becomes a bit more tricky in terms of consideration of the UK tax residence position. So quite often we end up down at the sufficient ties test and looking at and considering how many ties you have to the UK. Again, something that we just have to worry about or consider when it comes to these people with relevant jobs is something called Dean Days, if there's enough ties to the UK. So in certain instances, they might be moving outside of the UK and giving up their home in the UK. But I suppose the question then becomes, if they're in the UK for work purposes, where are they going to stay?
And presumably, just thinking through that, because the second automatic UK test still applies.
Yeah.
And so, whereas we have a lot of clients who will leave the UK and break residence because they're going to full-time work overseas under case 1 of the split year treatment.
Yeah.
Pilots can't do that, right? Because they just don't qualify, provided they have the number of journeys. And so then, in order to break UK residence in any given year, they would have to end up giving up their home. So the idea of being that person, like a lot of clients who, I don't know, go to Saudi Arabia or leave their wife and kids back in the UK, that just doesn't work for pilots.
No. I suppose on the face of it, if their partner were to go and start full-time work outside of the UK, case 2 might be available to them. But the downside with that is quite often couples tend to work in the same arena.
Yeah, we often do. The chap's a pilot and the wife is a cabin crew or whatever, or another pilot.
Yes. So
we're an equal opportunities podcast.
But yeah, so case 2 sometimes won't be available. So you would be looking at case 3, but even then, I mean, case 3 has a limit of 15 days back in the UK, or 15 midnights back in the UK between then and the end of the tax year. So again, it's one of those where
it's hard, right?
It's hard.
But I guess then you look at it, and we'll come on to this in a minute, that actually, because of the way that you're taxed, and there are specific rules, like HMRC have all sorts of weird and wonderful rules for pilots who are resident in the UK and how they should be taxed, which is different from how like bog standard workers in other industries are taxed. So I guess it probably comes out in the wash eventually from a tax perspective. It's just difficult sometimes to get there.
Yes. And I think as well, I mean, we have conversations with pilots who are looking at leaving the UK, and we talk about the statutory residence test, and I suppose coming up with a bit of a plan for the statutory residence test. But depending on the travel patterns, depending on what's required from a work perspective, I suppose you have like long haul flights, and people who are doing those long haul flights might have less time physically in the UK than those who are doing short haul flights. So it is one of those where you might come up with a plan, but fundamentally, I suppose, from a work pattern perspective, you've got to do what's
needed for your job.
Right?
Yeah. So let's go back to the deemed day point, because that's a suitably technical point we can dig into. So what do you mean by deemed days when it comes to, you mentioned that if you have enough ties to the UK, just talk about that in a bit more detail.
Okay, so the starting point when it comes to the statutory residence test is in general, you're considered to have a day in the UK if you are physically present in the UK as at midnight at the end of the day. But obviously somebody might arrive maybe on a Tuesday and leave on a Wednesday, and they will have only had one day from HMRC's perspective. So that would be the Tuesday. The Wednesday would be considered to be a deemed day where you're in the UK, but you're not actually there at the end of the day. So it doesn't, in general, count towards your day count. From HMRC's perspective, if you have been a UK tax resident in one of the previous 3 tax years, and if you have at least 3 ties to the UK during a tax year, then the deeming day rule will kind of kick in and basically potentially start adding days to your day count. The first 30 deemed days are free, as it were, but anything above that would get added to your day count. So I suppose from my experience, if your base is the UK and you work on a plane, if you have 3 ties to the UK, it's highly likely you're going to end up being considered to be a UK tax resident for the year.
Yeah. So it's just one of those things where, and this is the point, right? So as an airline pilot, when you do your 6 trips across border, it kills your full-time work tests in terms of them just not applying. Mm-hmm. And then you almost certainly will end up into the sufficient ties test. And then it's a question of you fall within so the deemed day point is nothing to do with being a pilot. I think is important to stress. Yeah. It's to do with if you've recently left the UK, or you're looking to see whether or not you've become non-resident, and you have a lot of days. So it's essentially, And it's a bit weird, I guess, because I suppose it makes sense, because what they're, I guess, trying to say is we're looking to clamp down on people who are trying to manipulate the rules so that they actually get a lot more days back in the UK. And you do this whole thing of like, I've landed on a Saturday morning, I'm taking off on a Sunday. That's one day. I can then basically have every single weekend of the year in the UK because that's only 52 days. And then I've got enough. And they say, well, actually, hang on a minute.
Yeah.
So that's one of those real subtleties about the statutory residence test that people miss out on. Maybe tangential to that, we can just touch on transit days as well. How does that apply when we're looking at pilots? Is there anything special there, or is it simply the transit rule?
So I suppose the main thing to be aware of when it comes to transit days are that transit days are only applicable if you are effectively going through on a journey, and that journey happens to pass through the UK. So say, for example, you were flying, I'm trying to think of somewhere where you might...
You live in Spain, you want to go to Tokyo, and you're flying via a flight through Heathrow. Yeah.
So in that particular scenario, you arrive in Heathrow before midnight, you leave Heathrow after midnight. The starting point is that you've had a day. But assuming you are literally, you're arriving at 11:58, shall we say, and you were leaving at whenever the first possible flight out of the UK is, you're effectively staying in the airport. You're not doing anything that's kind of outside of the journey. You just happen to be passing through. That would constitute a transit day, and in general, that can be knocked off your day count when you're looking at the statutory residence test. The big thing, I mean, there's various things that you can't do when it comes to transit day, but the big thing that you can't do is work at any point of that journey. So in certain instances, say, for example, people have to arrive in the UK on the last flight. They maybe arrive in the UK before midnight in order to be ready for the first flight of the morning. That's not going to constitute a transit day because of the fact that on the way out of the UK, they're going to be working.
And bringing it back to pilots, one of the things that I guess is the next stage of this is that pilots under HMRC specific rules have certain things that count as a work day in the UK and don't count as a work day in the UK.
Yes.
You just want to cover that?
So I suppose the starting point from a workday perspective from the statutory residence test, I think if you've got a flight starting or ending in the UK during a particular day, that is effectively going to constitute a UK workday from a statutory residence test perspective. From a taxable income perspective, slightly different rules. So if you've got a flight that's starting and ending in the UK, whether it flies,
if it goes, well, let's say London to Edinburgh,
then that's
a workday.
That's
for salary taxation.
Yes, and that will be fully taxable in the UK, even if it goes out of UK airspace. If you are UK tax resident as a starting point, even if you're treaty non-resident in the UK, if you have any flight that starts or ends in the UK, that's going to be taxable in the UK, although I might look at consider some double tax treaties at some point.
Yeah, we'll come on to that.
But before you consider
to make it even more complicated.
Yeah. And then you've got if you are a UK tax non-resident by means of the statutory residence test and you have a flight that starts or ends outside of the UK, then it's not taxable. But obviously the bits that you do in the UK before you depart would be considered taxable, and in general most airplane companies are going to be able to
typically airlines, I think we could go with.
Yeah, we'll go with that.
and it's interesting, right? So yeah, on one of our clients who's UK tax non-resident, he flies a lot backwards and forwards between Spain and the UK.
Yeah.
And we always get a schedule, and he's taxed in the UK on what are called ground days or something, where he's got training or whatever it might be. But as you rightly say, because he's non-resident as a starting point, if he lands in the UK, that's fine. provided he's originated from outside the UK, and it would only be if he was on a domestic flight, essentially, that would then be captured.
Yes. That being said, as I say, I think in that particular instance, we've seen a report from the airline to say this is the percentage of work that you've done in the UK. This is the percentage of work.
Because the airlines are pretty well sort of set up, aren't they? Because they understand that it's a particular issue. Okay, so that's the base case. Fairly complicated. Some of the stuff that you have to understand around the statutory residence test. It's one of those funny things, isn't it, where when you look at rules, there's always a temptation, because 98% of our clients aren't pilots.
Yeah.
You sort of get to that end bit about international transportation worker, and you just like blank it out almost.
Yeah.
And then suddenly you get a client where it's relevant, and then you have to dig into all the weeds on it.
Yeah. I've got to be honest, I end up saying that it's not an international transportation worker to every single person that I do like a briefing for or anything like that. And
just in case they pop up and go, actually, I am.
It's not so much them, it's more that if they're talking to their friends that happen to be airline pilots.
Yeah, no, fair enough. Okay, so that's the first bit. Then we can come on to the next overlay, which is the whole interaction of this stuff with double tax treaties.
Yeah.
Because there's always, I say always, most of the time, there will be a specific clause in tax treaties as to how international transportation workers are treated under the treaty.
Yeah.
And you mentioned a moment ago about you can be resident, but even if you're treaty resident, and that will immediately confuse people.
Yeah.
So do you want to talk a little bit about how the treaties work for this sort of in general? And then I think it's worth having a bit of a compare and contrast, because it's one of those clauses where, I mean, how much of tax treaties is the same? Probably 70% of it is pretty boilerplate based on the OECD guidance. Yeah. And then it's the 30% where there are differences.
Yes. So I suppose to take it back slightly, if you're a UK tax resident by means of the statutory residence test, but you have relocated to another country, and say, for example, you've got a home set up in the other country and you've become considered to be tax resident in the other country, and you do have to go careful because, for example, if you arrived in Spain and got set up on the Beckham law system, you're going to be considered tax non-resident in Spain. So you do have to make sure that you are actually going to be considered tax resident in that country, and the relevant double tax treaty is going to apply. But assuming you are considered to be tax resident in the other country, then you can start looking at the double tax treaty in an instance where the starting point is, from a UK perspective, you'll be taxable on everything. And as you say, this is a bit of an area where I think we see a degree of difference when it comes to how various different countries have got things set up. So we had a quick look through a few before we jumped on this podcast. So I think Spain...
That's how interesting we are. We review tax treaties.
Yeah. So Spain is one which basically says, I think, where you're considered to be, where the airline itself is considered to be resident. So effectively, I don't know, say for example you're working for British Airways, it's a UK resident.
There are other airlines available.
Yeah, but it's a UK resident company, and therefore if you are UK tax resident, the double tax treaty provides no protection, because if the company you're working for is
essentially UK can tax if you work for British Airways, and you, even if you're not resident, you can be taxed by HMRC for your UK work days.
Yes. Yeah. But I was going to say, I suppose the starting point, if you're a UK tax resident, is the UK is going to want to tax you on everything, and then the double tax treaty provides no relief. We looked at the UAE double tax treaty beforehand. That one will tax. It's the country of residence that gets the right to tax. So unless the work is explicitly carried out in the UK, I think.
But just to flesh that out, so I am domestically resident in the UK.
Yeah.
I'm treaty resident in the UAE.
Yeah.
Who does what? So
on the face of it, it would, I suppose, almost work as if you were a UK tax non-resident in that particular instance. Where, I say, I'm blanking slightly, but I'm pretty sure there was a section in it that said, except for work explicitly carried out in the UK.
So what you probably end up finding in that scenario would be that your full UK work days would still be taxable in the UK, but everything else would be taxed in the UAE.
Yeah.
I mean, I guess the point is, I mean, you have an encyclopedic knowledge of a huge amount of this stuff, but I wouldn't yet expect you to have memorized all of the tax treaties for however many there are. But again, it comes to this point, doesn't it, that it's really important for people to remember that if you are in this industry, understanding exactly what your obligations are before you go and move to a different country or whatever is really, really important. Now, the one thing I guess that, as we said a moment ago, most airlines are pretty good about providing the relevant information because they understand that this is an issue that their employees have to deal with. But it is an area that certainly takes some sort of picking through, and it's very circumstance specific.
Yeah. I think as well, if you are thinking that you're going to be breaking residence, having a conversation with your employer is a very sensible starting point. The main reason being is, I suppose, if you're working for a UK-based company, if your job is based in the UK, the starting point is that you are going to have UK taxes, national insurance, social security withheld at source, and depending upon your residence position, if you are becoming UK tax non-resident, all of a sudden maybe 5%, 10% of your work is actually taxable in the UK, and the majority of it won't be taxable. And something that your employer can do is to operate a Section 690 agreement in terms of your payroll, where if they are aware that you are becoming UK tax non-resident, if they are aware that realistically you're only likely to pay tax on 5-10% of your income, they can apply to HMRC to only tax that element of it at source.
And then you reconcile it through a tax.
Exactly. But it is worth being aware that if they do that, then you do need to do your tax return at the end of the year. And I suppose the potential risk factor associated with doing that is, say, for example, you were in Spain, you were expecting to be UK tax non-resident, so you got the Section 690 in place, only 10% of your work days were taxed. And then at the end of the year, you've done too many days in the UK, you're actually a UK tax resident. All of a sudden, all that relief that you've had at source, that now needs paying back to HMRC at the end of the year.
Yeah, and it's always that. It's one of those funny things, isn't it? We have some clients who really like to go down a sort of 690 route, or potentially get their tax code moved to NT in other circumstances, not pilots, but because it then means they get their salary. I've got a couple of clients who are like, oh no, I can't like getting the refund because it's like a big pile of money that comes in at the end of the year. It's an interesting one.
The only downside to doing it that way is in the majority of instances, you've moved to another country, assuming that work that's been done in the other country, you're going to have a tax liability in the other country, and obviously
you might need the money earlier.
I mean, again, talking about Spain, their tax returns are due quite early on compared to the UK tax returns. So the UK tax return system opens on the 6th of April, and Spanish tax returns, I think, usually by the middle of June need filing. So you don't have a massive window. You've got to get it filed and get the refund issued to you, which again, in the majority of instances, isn't too much of a problem. But if for whatever reason HMRC opens up
investigation or whatever,
additional security checks or whatever, then you can end up in a situation where you need that money to pay the other tax authorities and don't necessarily have that money readily available to you. So that's the only risk factor.
Cool. So yeah, if you're a pilot or cabin crew or long distance lorry driver who does overseas trips, this is stuff you have to get right. And so the best thing to do is to get in touch with us here at LSR Partners, and we can definitely help. Thanks for listening. Thanks for listening to the Tax Compass podcast, brought to you by LSR Partners, where we help you pay the right tax in the right place at the right time. Book a call with us. Details are in the show notes.